Hey traders, Spartan from SpartanTrading.com with a new quarterly in-depth investment analysis. Today we're going to be talking about ESE Entertainment. Now, I've been looking for the last 2 to 3 months for companies that are undervalued in spaces that are growing and that are either dual listed in Canada and the United States or just listed in the US. And what I've found is there's a lot of different companies that are dual listed that have basically been flown under the radar after they've come in the last 2 years in regards to valuations. A lot of these small caps got hit, and there are some very high quality names if you do enough digging. Now, I've been able to find this name. I talked to the management, interviewed them. I went through all of their basically finances, looked at their pipeline and everything compared to their, competitors, etc. And I found that this name was extremely high quality. The valuation of it makes no sense down here. And in my opinion, you have quite a lot of upside. So stay to the end of this video to get where I think my price targets are going to be going forward. But let's dive in and take a look at this quarterly in-depth analysis. So ESE Entertainment, guys, what is this company? So this is an esports gaming company. And what these guys do is they strategically position and capitalize on the esports market by providing all of their clients with 360 marketing solutions. So you have big companies that they deal with, like, for instance, Samsung, Red Bull, Apex, Google, Riot Games, ESL, etc. And they give these guys access to their publishers. They give them access to bring in sponsors into events, and they have their own ecosystem internally that they're able to basically distribute all of this information and advertising to. Now, what this does is it allows these Fortune 500 and 100 companies to connect with younger audiences, which obviously is the future of the e-gaming sports industry. So they're in a unique position to capitalize on that. And the fact that they've worked with so many big names already is extremely beneficial for when they want to bring on new, larger companies again. So the great thing about obviously working with Fortune 500, Fortune 100 companies, and this is what I love about this business model, is when you get a contract, if you do a good job, which these guys do a great job, because obviously you can see that these contracts continually be renewed, is obviously these Fortune 100 and 500 companies are cashed up enough to continue to renew those contracts going forward. So it's almost like a SaaS-based approach, which just builds and builds and builds on the revenue, and eventually will take this company from break even to profitability. We'll get into those finances later, but that's kind of the gist of why I really like the space. Now, one of the other things is the esports space right now is around 217 billion, and this was in 2022, and they're estimating this is growing 13.4% year over year, which is massive. We're expecting by 2030 for this to be a $400 billion industry. That's a lot of trickle down money. Even though these guys aren't the biggest in the space, there's a lot of room for growth here. And I think when I talk about and compare these guys to the competitors, you're going to see why I think these guys have the upper hand in the space as well to really capitalize and take away market share away from a lot of the larger companies. So ENTEF, obviously, like I talked about, works with a lot of big companies. I want to talk about a couple of the other market opportunities here. So one of the big things is the Middle East expansion. I'm sure you may have seen some stuff online with what they're doing with the esports, but Middle East is investing quite a bit of money into the space. They're actually building an esports island, which is pretty cool, which is going to be dedicated strictly to this industry. And we're seeing around a total of 40 billion for now going into this industry. And I would expect that to increase as time goes on. There's also 2 other pieces I want to talk about. So their partnership with Metro Pro is allowing them to tap into crypto and blockchain markets, which we know are exploding right now. And I think this opens the door up for new monetization models, as well as, it gives them the ability to later on create digital assets and be a part of that exchange and ecosystem. Gives them more exposure in that space. And as we know, the crypto space is, fairly large with, the younger generations, and it fits really well, or cross fits really well with who already their audience is. So it fits very nicely there. And then we have this ESE ownership and game addict, and this is something that I would definitely look into a little bit more, guys. I have a little bit of a piece here, but this is extremely impressive. So They own 30% of this technology, Game Addict, which is nice and profitable and continues to grow. The CEO of this company, or the CEO, past CEO of this company, was also the past CEO of Booking.com, Darren Hudson. So a very impressive individual. And ESE earns direct revenue from owning this asset, Game Addict. Now, this is something that obviously they have no overhead on. It's just an investment that they're collecting dividends on. They're paid per new user acquisition. So it's just basically a cash cow investment that they have that should continue to add to their additional revenue, because Game Addict is, continuing to grow at, quite impressive levels. Now, when we look at their comparative analysis to them and their competitors, I see a lot of big gaps where people aren't seeing what this company truly should be worth. I mean, when I first went out on the company, the market capitalization was around 4 or 5 million US. Obviously, since I've came out on it, people have actually seen what this company's for, for what it's worth. It's up about 80% from 6 cents on the US side to about 10 cents. So not a huge move, and I think it actually has quite a bit more upside. Now, one of their competitors is this OAM, and this is the main competitor I wanted to bring up, because these guys, were in a similar spot. They went from 10 cents on the Canadian side, and they went all the way up to around 66 cents. These guys produce less revenue. They're not profitable. They don't have it as an impressive as a basket of assets, and they've worked with some bigger guys as well. But I think if you look at, compared to ESE, the clients that they have and their assets, etc., and also the financials, it's clear that this is a much better company. And the run on ESE is just starting. So, my prediction is we're going to have similar upside, if not more upside here. And there's no reason why there shouldn't be a sympathy from this name into this name, or in the actual space into this name. Like I said, these names that have gotten beaten down, they're just not being looked at right now. But there's actually something real here. This is a real company making real money, and it's very easily going to be able to get to profitability, in my opinion, because of where they're at right now. If we take a look at the growth potential in all the different places they're in, we can see that obviously the revenue stream should continue to increase going forward. Some of the largest companies in the industry, like Playmaker Capital, ESE, Facet Group, Keyword Studio, I mean, we're talking 110 million capitalization to like billions, and it's not, I don't think, that difficult for them to scale to get to that point, because this is an extremely scalable business, being that it's all online. You don't need too many boots on the ground to get to that point. So with their market cap where they're at, I believe extremely undervalued. There's an opportunity for quite a bit of continuation higher. The assets they own are great. If we take a look at their financials, we can see that overall revenue 2023 year end, 19.1 million, and they're at break-even profit. Whereas if you look at OAM, they were revenue of 15 million with a net loss of 41.5 million. So, TTM revenue on ESE 58 million and a break-even position. You can see there's a significant disparity between the two, and obviously ESE ENTEF on the US side just holds a much stronger financial position than these guys in this industry. So another reason why I do like the name. In short, guys, in conclusion, let's talk about the upside here. My first target on the upside, and we can talk about the US side and the Canadian side, but let's go to the US side, because most of what I do is obviously on the US side. So ENTEF, if I'm looking at the chart here, Spartan trading, my price targets going forward, I'm going to be looking for a push right now through this 10-cent level. My first real target's going to be around 20 cents. So I think we have another 100% of room upside here in the short term. If that level breaks, I think my next target's going to be around 36 to around this 44-cent area. I'll be looking for consolidation up there. And if that level can break, ultimately, I think we can push through that 55 and get around the 55 to 69 cent. Depends obviously what's going on with the company from a macro perspective, but everything right now bodes well for more upside. I'm thinking at minimum, in my opinion, 200 to 300% from here, and we kind of take it from there. So far, it's been a good trade. We just started this position. We continue to build on it. I have a decent sized position on it right now. I'll let you guys and keep you updated as things go on going forward. I think this is probably a 2 to 3 month play minimum to start, and then depending upon how everything goes from a macro perspective, we can obviously increase that. The risk reward from this area, guys, is fantastic. I mean, what are you really risking to get to that next point? And if you look at the financials and you see that this is a real company that's tightly held, 30% of the insiders own the stock. It's got it's got a smaller float, especially at it being at this low level. It doesn't take very long for something like this to catch on and get actually some pretty big legs behind it. Take a look at it. Take a look at the structure of it. I think you guys are going to like what you see. I think there's significant upside here still. And yeah, let me know what you guys think in the comments below. Thanks for watching, my friends. Stay tuned. I got a couple other names coming out shortly here, but this was one of my favorite names that I've seen in a long time. So I think it's worth going through that thesis. That thesis will be linked in the description of this video as well. Come join us at SpartanTrading.com, guys. Thanks for watching, and I will talk to you later.